Hello, warriors, fellow market addicts. How are you? Hello, Michael, James. Hi, Kman. Hope you had a nice holiday. Bran, yes, I'll try and lead us into the new year.
Yeah.
Paul and Ingmar and Mike and Patrick, Louise, welcome to F.A.C.E. And Sinatra, how are you? So I know Steve's with me today.
Good morning, Coach. Good morning, everybody.
Yeah, and Kman's here today. So Kman, good morning to you. Good afternoon. Dollar continuing its
Yeah.
decline, led by euro approaching, this line I've been talking about for a while, like it's around par 90. Gosh, it could be there today. What's your take on euro up here? I
Yeah,
know
we
you.
are in full year-end swing then, and as I was saying like last week already as well, it looks as if the year is going to end on a very positive note. Some in a way for the markets then at least, not really geopolitics, but for the market at least, and that the dollar is likely going to remain on the defensive. Now, today we're trading value data end of month, end of year. Perhaps there may be a bit of dollar shopping to be done by the US corporates, but they have been relatively quiet over the past few months. So there isn't much standing in the way of those year-end flows, and that at least in equity markets, bond markets, and that all of that is, of course, weighing on the dollar. People have to sell a few dollars, and it's likely going to be the theme into the year end.
And are you
And
looking for any reversals next year, Kman, that we complete? This has been a pretty good wave down in the dollar index from 104, 104.40-ish, right up here. So a lot of people are saying we could be completing this whole wave from 107.40, okay, to here. And this could just be the first wave down, which implies some type of bounce coming from somewhere that could lead to another dollar selling opportunity next year.
Yeah, we know, right, what can happen. We can print a bit of an extreme into year end, and then even the first week of the year, and then suddenly everything reverses for a while. I'm not excluding, because the market is really has jumped on that train for lower yields everywhere, barring Japan, of course, and positive markets for as long as the economy doesn't show ultra weakness. And that's really what we've been trading: Goldilocks, soft landing, and in the hope that Europe and the UK, on the other hand, don't fall into deep recessions. If they can avoid a very deep one, the markets are going to be very positive. But then at the same time, we've been trading it for 2 full months, right? So as I've read, and also other people were saying the same thing, and I was thinking it too. We've already traded half of 2024 at the end of 2023. So
A
yeah,
lot
I think
priced in is what you're saying.
I'm saying what?
A lot is already priced in.
I would say that there's a fair bit has already been priced in. Inflation will probably continue to tickle down, but at what speed is going to be the real question, right?
Any reason
And
why Japanese yen, US dollar yen, has not really followed the dollar? It's kind of just been holding instead of declining like Dixie.
yeah, I think the yen did its move before, and it is really trading Bank of Japan expectations, right? The numbers are okay-ish, but then if we had the minutes out, and it's still half warm, half cold over there. They still haven't really made up their mind when they are going to really change the interest rates. And I've already seen a few calls, and I wouldn't completely disagree with them that regardless what happens elsewhere, the central banks will start to cut rates. But imagine that Bank of Japan stops after 2 hikes, or put the yields at 0.5%. The rest of the world will still be well above come the end of 2024, right? So for how much longer can we trade yen strength, or how much further can it go? Um, for that, the Japanese economy will need to outperform, right?
Well, fundamentals better than me.
Well, yeah,
I look at the chart, so
yeah. You look at the charts, and then you see those big moves, and those big moves have been sparked by what we are talking about, right?
of
So the
course, yeah, okay,
Bank of Japan expectations plus the rest of the world inflation coming down. Those were those two moves. Now, the question is, will it continue? And if you look at it from a technical point of view, my simple takes, okay? We are stabilizing here. So the market is waiting for the next impulse. Um,
okay.
could it be lower? It
So
could be
just
higher.
wait for the market to ring the bell.
Yeah, but I maintain what I'm saying, what I was saying in the past. If this goes back to that 127, 130 area, I'll probably close my eyes and buy it. Really buy it for
Oh, you
longer
mean
term.
down if it goes here?
Oh yeah.
Oh, okay.
Okay,
All
I know
right.
I know it's a
So
big move, but I mean it's like looking ahead to the events. If we see market speculation, we did see 7, 8 big figures downward move in very short order, right? So
yeah.
it is possible that the market really goes bananas on the yen and goes like, all right, we need to buy the yen, and but timeline. I think by March, April, the party may be over. That's my more medium-term view right now.
A pretty good similarity with a little bit of time lags with yields.
Mm.
Did you notice a similarity between this and this? These are weeklies.
Very much so, right?
Yeah,
There's very much so. But now you can overlay it with any of the dollars. They're all going relatively the same way,
yeah.
barring a couple of exceptions like China also, for instance. But the rest is pretty much going the same way.
Okay, silver weaker than gold. It's actually near the lows of the week, while gold's pushing up against last week's highs. So gold silver ratio is acting okay. They've turned it back so many times from this level. If they're going to knock at the door again, got to think one of these times that this resistance has been weakened by attempts to break down the door.
Yeah.
Maybe the next time the door gives and we break through it. Just
But
something to keep an eye. If this happens, this is not necessarily bullish metals because this is saying gold's leading. Um, the most bullish case is when silver's leading. So just
right.
something to consider going into year end.
Yeah, yeah, absolutely. It's probably one that you want to keep very close to hand for the start of 2024, right? To see if
Yeah,
your resistance is going, or if we start to get back down to the big support. It is a pretty strong box, the one that you
yeah,
or range. It's a pretty strong range. Yeah. It's also, I think, the case that the market is again saying like, all right, I mean, 2023 might not have been the year, because if you see start of 2023, we had this big rush in the gold silver ratio
yeah.
because the market was expecting recessions. Then it stabilized because we traded the Goldilocks scenario, and now to end the year, we're creeping back up to that break zone. So is that the market expecting that we are going into 2024 and finally have that recession? It's possible.
Yeah.
It is possible.
Even if it's mild, so, we don't know the degree, but I think we'll get at least a mild one, like a cold, maybe not COVID. So we'll see. Uh,
Yeah.
I've been talking for about 132 in Canada for a while,
Mm,
and here we are.
yeah.
So I don't see any reason to aggressively buy it because it's not just um, the price level.
Yeah. I mean,
It's how it
timing.
gets. It's how it gets to it. So
Mm.
I mean, this kind of momentum at 20
Hey,
usually
hey,
would not
Yeah.
would
Yeah.
usually would not signal a bottom. Go ahead,
I'm
Blake.
sorry, I hate to interrupt, guys. And Kman, it's so good to see you. Merry Christmas and happy
Can you see
holidays.
him?
Iraq agrees to develop joint oil fields with Iran, and that comes from the ministry. And oil just took a $1 drop. Just had to throw that out there, guys. Just
Oh wow.
Wow,
Okay.
that's actually. Do you think that's a logical move on oil? I don't know whether that's really good. If
I don't think
Iraq,
so.
So what are they doing? Holding hands and producing oil together?
Uh, uh, apparently, and but if you think about that, that's going to put Iraq right into the to the
The
sights of
mix.
the U.S. So yeah, I don't know.
Well, Blake, part of what happened in the war in Iraq was that Iran really benefited by having us lose, spill blood and treasure to do their job. And the Shiites have come to dominate a Sunni nation since then. So they've really almost become one country in many ways, based upon Shia and Sunni.
Yeah.
So, yeah, it's
What
really
what
something. They've been enemies eternally.
what are your
Um,
thoughts here, K man?
on what you just said.
Yeah, no, on just on this news about oil.
Yeah, well, I understand the immediate reaction because the market thinks like, oh, all right, perhaps they are going to move a bit away also from the OPEC or OPEC plus influence. That may be hinting at more production, but on the other hand, I think for on the geopolitical side, it's not a good thing. And I wouldn't be surprised if we find a bit again in oil, or it weighs on some different risk also. I don't find it very good news
well,
yeah.
yesterday with Steve, we did the technicals, and it's
I
this line.
I was
Steve,
about to intervene. Yeah,
There
saying
you go.
that exact thing that this technically fits perfectly the descending channel that we've been looking at.
Did
Right.
you have
So
it tag it? Because I have probably drew a different angle on the downtrend in WTI. Did it
yeah,
tag
it
your line?
is. It goes a little bit lower. It doesn't go through the second week because if you draw the parallel, you'll see that the
Okay.
parallel has a little bit of a different,
Yeah.
which means the trend line support.
Steeper.
Yes, yes,
Yeah.
yes. So
Why
you
don't you
need to
show
adjust.
your chart? Why don't you show your chart, bro?
Sure thing.
Instead of me redrawing it, let's look at you know, instead of a copy, let's see the original. So
Of
there you
course.
go.
Second. There it is.
Because
So,
the oil's going to be the whole ball game for whether the Fed is really done or not. So yeah,
so
I
here it
think.
is.
And
Here's
okay,
the chart.
yeah, nice.
See?
Yeah.
So yeah, I mean, as I was saying yesterday, we've had a nice rebound, but until proven otherwise, crude oil remains in a medium-term downtrend. We've been in this pullback since more or less mid-September. And as long as we don't break through this channel, there is, of course, the possibility of more losses and even a lower low.
Yeah.
Even a move towards the May low at 63.70.
Well, that could keep the cutting
The
party
inflation,
going.
the inflation going down narrative,
Yeah.
yeah, live and kicking. Absolutely,
Yeah. Yeah. Keep
absolutely.
that going.
Yes, absolutely.
All
That
right.
is indeed
So,
the case.
Blake, any thoughts on what's happening here today?
No, as I told Steve last week, I'd be waking up a little bit late, and I'm just kind of still groggy and kind of looking around.
Okay.
And Steve, I mean, you did such a great job yesterday showing what you're looking at. Maybe you can expand on that today.
I
Yeah.
have no problem doing it today again, Blake. But I assume that many of the people that were here yesterday are here today again. So since we haven't had really any price action since yesterday, I think it's a better idea if somebody else shows their chart because it's not that I have anything extra to add since
Let's look
nothing
at
has happened
Kman's.
since.
Let's look
Yeah,
at Kman's
absolutely.
charts.
Mine?
Yeah, we
Nobody
hardly see
understands my
yours, bro.
chart.
We want to see what the mad scientist does on his
Right.
chart.
Nobody understands my charts. Even I have trouble to understand my chart.
You
Yeah.
could share
No,
them.
you really want
At
to?
least it won't be the black background like Ryan's.
Okay, man, if you don't
Right.
want to share them, I can share my charts. It's fine.
Where
I
he
got it.
wants to. He wants to. He's
Yeah.
just being, I don't really want to get on stage
All right,
and
here.
All right,
entertain
there
you.
we go. Okay.
There you
There
go.
you see.
Ooh, beautiful.
There you go. Yeah, like Brent calls them the rainbow charts.
Oh, they are really. Oh,
Yeah, so okay.
so,
Right. This is a couple that I'm watching into year end. Okay. So
yeah,
just a few of them I'm keeping an eye on. So first of all, this dollar cat, I think we've
yeah,
broken here around 133. And as I was saying, that I'm relatively positive towards risk, but in the sense, not geopolitical, but in the sense of like equity markets and risk related to a couple of commodities and stuff. There's a few that I'm keeping an eye on for possible accelerations into year end. So this first one is the dollar cat, and I would not be surprised for as long as we stay below 133 that we can have a look at the July low, and why not come here into this little box, because that's also what I said in the chat room this morning, is that we have to be very careful with what happens at year-end stuff, because there's very little in the way of asset manager, money managers, supranationals, you name them, what they have to do as flows into year-end. The speculators, they are a bit on the sideline, unless we're going to see extremes. So I think if the overarching theme is still for dollars to be sold, so there is a possibility that we have a visit here in this July low, into this July low, and if it really if the flows are really very big, why not have a look at this zone here, which comes in just below 130, where I think then it should be enough, and where I rejoin Steve's opinion is that, yeah, I think oil may go a little higher, but I also do think that we are going to run into trouble relatively soon, and not too far from here either. So if oil comes back down, assuming that Canadian dollar trades a little bit on the back of the oil, and seeing the expectations for the Canadian economy into 2024, if I would see this kind of extreme around here, then I would start to get the butcher's gloves out and catch a knife. Okay. Now let me show a couple of crosses that I'm watching, because those I'm in right now. So this is there's a triangle and a support line which comes in from right up here in April 2023 on the EURUSD. We've been testing this a good few times, and it has been holding so far. But I do think that there is a possibility that the euro purchases will be running out of steam, perhaps before the end of the year. So I'm looking for this, for at least perhaps a temporary breakdown, for as long as we hold below 146, call it mid 146s. And perhaps to have a look at what's happening in the 145 zone. This is what I'm looking at. And the other one that I'm in for a while now is EURUSD. Been trading from the short side really since a while. It's still doing okay. It's stabilizing around here, which might have been expected. But I do think that if the antipodians are doing okay, according to what I expect, into the end of this week, we may have may have a look a little bit lower before then finding a bottom into perhaps the first weeks of the new year. All right, and Aussie bid, and we were talking about the 69 level. I've got it here as well. The June, July highs, looking at how the antipodians are bid into year end, I think we can actually go even, why not, you know, there's still 2 full trading days to go tomorrow and the day after until the last fixing of the year. I think we can, it's possible that we reach this zone here, bit of an overshoot, and reach into that zone to close the year. I'm thinking that the antipodians could have a positive end of year. Kiwi, it's possible that we go here around 64.10. That is a possibility. We're trading around 63.30 right now. Yeah. It's been very, very big as well. I'll save you all the because then it's going to get really messy, the clouds and stuff, but it's still supported on that side as well. So I reckon we can have there is a possibility that we have a revisit of the July high as well, you know. I don't think euro dollar, but who knows? We'll have the strength to get there to that July spike high. But never say never. But I think 111 is already going to be a good enough level to watch from a personal side. It's a 78.6 of the 112, 104.5 decline, and it's the 127 of the 110, 107.30 decline as well. So I guess that's going to be a good enough target.
And there's a lot of like previous highs from back of early this year. Yeah, if it's like a longer term head and shoulder pattern, you know, there's a good chance that we see that, and around there is gonna, I think, watching the price action, especially if we're up there this week, watching the price action is going to be pretty key in my opinion.
So that's a bit the stuff that I'm watching right now. Silver is quite neutral. I have not really been in gold too much, but silver is a bit neutral here for me. Could go a bit anywhere, but if we start to break 25, I think we're off to the races. I would not be surprised if we get back down first, and then start to pick up again. But for me, I'm relatively neutral here, right here and now. And that's it for me, folks. Dollar yen, as I said, is neutral. I'm looking at this here, 143, 140, 180, stretch it to 65 perhaps. That's very neutral. And then we will see what happens in the new year. We have, I think it's Bank of Japan is one of the first ones to meet again, right? Around the 15th of January. So there's going to be a lot of expectations in there again. But according to what I heard from Ueda and his crew, I'm not sure that January is the month really that we need to expect the normalization to really kick in. And that could perhaps put a bit of pressure again on this trend line here.
I'm salivating to be short at like the 143.50, 144 range.
Yeah.
Yeah, I'm just
Hey,
hoping.
Kman, where are your clouds? I know you talk about them. I don't see them on your charts.
No, but that's why I hide them sometimes.
You do? You hide them? All right.
Shimoku clouds. Yeah, because
All right.
otherwise it gets. I told you my charts tend to get a bit messy. Yeah.
I think they're clean.
You think so?
Yeah, I think they're.
All right. So I'm looking at charts, but I'm clouds. Sorry.
Kman, since it's fresh in my mind, if you ever made Christmas cookies and you start combining all the colors of the icing, sometimes it looks like your chart colors.
I think he just consumes them.
You know what? I'll take that as a compliment. Oh yeah, Steve, you might be right. Yeah, I might consume a few.
And you're not the exception, I have to say.
Not at all.
So, okay, if you look at the dailies, and there it joins a bit what Blake is saying. We got the 200 DMA also around 142.90. Then we have one of the leading lines here on the cloud comes in around 143.20, and then you have this 143.5, 143.60 zone. So this whole zone, if we get a revisit here, this whole zone may find some stiff resistance. If we start to break 143.60 and hold it, I guess then we are going to have a look at 145 again. But the cloud is high up here, so that does not really come into play right now. This one, it did hold, and there it's really getting messy. It did cap the 4-hour ones a couple of times, and the main lines have been capped. They capped the debates in dollar yen. Now, also, I know that a lot of people, and I'm going to finish on that one. I know that a lot of people, in regarding to the clouds, they want to look at clouds on every chart, on every time frame. I mean, just my little 5 cents or 5 yen is don't do it. I mean, the Japanese, they don't watch anything tighter than the 4 hours, really. Maybe 1 hour or so, some of them, but really they don't watch anything tighter on the time frames than the 4 hours. And I say don't go looking for stuff that isn't there. That would be my
Great advice. Yeah.
my advice if you look at Ishimoku clouds. You can we can read a lot about it on some of the supports. I think I know we call our Investopedia. I think they've got a lot about it as well if you want to read up on stuff. Yeah, so that's about it for me for now.
Thank you, man.
Yeah.
Really good stuff. I'm going to be calling on you more frequently to show your charts next year.
Will be my pleasure, Dale. For you, anything, you know.
Wow, I tell you.
Well,
I'm humble. I'm
in
humbled.
in a professional way, of course. I knew Steve was going to react to that.
I only
knew
mess
it.
around with pros anyway, buddy.
Hey Dale, you got about 2 minutes before Patrick comes in. Real quick,
Yeah.
I just wanted to share with everybody. Just I know we already
Steve got
talked
it.
about it, but just we're inching higher towards these highs in the S&P. And
Yeah.
remember, all-time highs are it's just a hop, skip, and a jumping away. And and very illiquid markets, very easily we can see us punch higher. Move above 48.30. We're going to be trading up at 4,900. That number continues to stick out in my head. I remember Jim Welsh. He screamed out 4,900 like a month and a half ago, and I'm like, okay, I don't know why, but I guess I could see that. And we're not too far away from there right now, and you can see the S&P is moving higher. Obviously, NASDAQ 100 continues to break higher. I thought it might be a false breakout, but no, it just continues to forge higher as well. And so there's no real reason to be selling equities. What Steve was sharing with you earlier about that crude oil rejection as we're approaching that 200 DMA. Their trend line, if you want to draw it right across the tops there, you can see we're struggling at some pretty key resistance. So just it's going to be interesting to see a move. Oh, I wanted to point this out too. One last thing with the dollar Canadian. I thought it would be very difficult for the dollar CAD to reach for these levels, from last week, because we had like this bear flag pattern, but that's going to take us all the way back down to 131 and change. And we're basically at 131.80, which is the 88% retracement of this entire move here, but a lot of support. And sure does feel like that we're going to go there, especially with the Antipodean, Australian and Kiwi, currencies in a breakout territory. So the dollar CAD, not too far to go, but it, another 100 pips to reach some pretty key levels of support. So just wanted to point that out really quick before you bring Patrick in. So Dale, thanks for being here this week, and thanks for having all these interviews. You got Patrick here today, but and then you have another interview for tomorrow, so it's awesome.
Yeah, Larry Tentarelli tomorrow.
Yeah, Larry's great. You know, he's great at
Yeah.
looking at individual
Pat
names. So
and Patrick, you know, that's a great time to have Patrick with us because he's a big believer in quarterlies and monthly closes, and now we could even look at yearly closes. So, in the precious metals, so it's going to be, you know, I think very, you know, insightful, great information to have going into 2024.
awesome.
So,
Well, thanks for being here, Kman, and glad you had a
Steve,
Merry Christmas, and Steve, thanks for being here. Everybody's going to look forward to seeing your charts tomorrow. And
I will be
Dale,
here.
I'm going
Thank
to
you,
pass it
guys.
over to you.
all right. Well, thank you, Dream Team, and having one of the original members back. It's like a reunion tour. So, Patrick Kareem, my trading warrior brother, really great to have you back. Appreciate you being here this time of year when most people don't want to be bothered, and looking forward to what you have to present today. How are
Hi,
you,
Dale.
Patrick? Hey,
Hi,
buddy. How are you?
Merry Christmas, Happy Holidays.
Same to you and yours.
Thanks. Well, look, it's yeah, I try to slow down a little bit during the holidays, but you know, charting is like in my DNA, so I can't, you know, I always come back to
Can't
it, always
stop.
have, yes. It was funny you guys were doing the USD-CAD because I think I wanted to start with that currency just to set a little bit the tone of the like the macro capital flows between those countries' currencies. Maybe I should start
Okay.
by I could share my screen there.
Yeah, go ahead.
But I'll do the USD CAD, but I'll show you guys why it's important, and I won't go lower than you guys see my screen? Yeah.
You got it.
This I've been keeping an eye on this because back in even here, there was a rising trend line. The USD was starting to put in these massive, I call them like exhaustion wicks. Like,
Okay.
like that was crazy. Then it broke down. We all thought it was
Yeah.
to the moon, maybe like at this stage here, but then it went back up. Right now, it still looks like a bear market rally or at least a consolidation pattern. So essentially, the USD CAD has gone nowhere for since 2015, right? It's just that pair has gone just sideways. It doesn't have the upwards momentum anymore. The 1 year and 3 year, they're just like oscillating. But this is what's been happening super recently. And look at this, man. This,
taking it out.
yes, yes. So that
And this
rising,
is bullish precious metals, and this
wow,
is why you're paying attention to it.
that's right. So what I'll do, I'll
Okay.
flip, I'll do CAD USD. CAD
Okay.
USD just to flip the
Yeah, that's a futures contract. That's how they trade it.
to flip, but I'll overlay why this is important for precious metals because I could put here's the ASA chart. The ASA chart is a precious metals fund that goes back all the way to the 1960s.
I remember it. They're South Africans too, aren't they? ASA?
I don't know
Okay.
where
Well,
that
I
fund
think
is.
they are. That's why it was SA, African
True.
South.
Okay,
See,
now it makes sense.
check it out.
And check out, like, at
Okay.
least recently, the ASA chart has been tracking the capital flows as defined by the currencies between the CAD and the USD. But look at this thing here. So this is it's supportive. If the CAD could continue its comeback versus and even do a rally just like it did from the abyss of March 2020 all the way back to 2021, man, look, even the miners have been showing some type of strength there.
Yeah,
Well,
you know, they have. You know, when we had that big reversal in Asia, Patrick, you know, when gold made new all-time highs and spiked, I don't know,
yes,
$80, $100. On the pullback in the metals, they were more severe than the miners because the miners are knocking at the door, a lot of them at the highs. They haven't reflected any major pullback like the physical did after that.
that's right. It's there's some relative strength here. There's a wall coming up. There's overhead resistance here for the CAD versus the USD, right? It has to get back above 3 or that's how bottoms are potentially made, right? You pay the price, you have a capitulation bottom, you move sideways, and people don't believe. But I can't say we're in a bull run right now yet because this is the angle of this line. dictates the probabilities of having a crazy sustained move upwards. Because let's say I just remove everything here, remove drawings. To have a crazy move like we did back in the 2000s for the CAD versus the USD. So here you have a steep descending trend line. It breaks above, but it doesn't always mean you're going to go all the way back here, right? You have to, there were a whole bunch here of periods where it went up, couldn't get back above the 3-year, got dragged down. It did a couple of times here, but eventually what you want to look for is less and less steep angles of your trend lines. And the less steep they are, the less downwards drag you have, and the more chance you have of having a flat plane breakout eventually. And then after that, you're off to the races and sustained move. So, but this is embryonic. It's great.
Yeah,
Let's see if we can
1999 was an important low in gold. I believe that central banks came together and agreed not to sell anymore. I think we were trading 300.
That's right, very low. And I'll do now the USD CHF. I'll tell you guys why this is critical for gold. Look, the USD CHF, I'll do it. Let me do it this way. The Swiss franc. For me, the Swiss franc is the strongest fiat currency, major fiat currency. Everybody's talking the US dollar is a reserve currency. But look, the US dollar has been just going downhill versus the Swiss franc forever.
Yeah.
The Swiss franc is so much more powerful. And I'll show you why this is important. And look at this. We're having breakdowns right here on multiple. Look, here was a break in momentum. So that's, you see the steepness. They still got upwards move, but the less and less steep. I don't know how I'm going to draw this one here, but the less and less steep these breakdown lines, see there's a rally, still upwards momentum, but now I think we've broken down a flat plane. 1, 2, 3 breakdown. This is goodness. It's like, I don't know how more convincing you want this there. It's like now we're breaking down a flat plane. This is really bad for the USD versus Swiss franc, but I'll tell you why it's important. Here's a little trick I have, guys. You do gold, XAU USD gold, but if you want that long-term gold chart price in Swiss franc, you multiply it times the USD CHF, and then what you have is a long-term picture of gold priced in Swiss franc. And I'll overlay the Swiss franc on top of that versus the US dollar versus Swiss franc. Where is it? Oh, goodness. It didn't do on a good chart. Move drawings. And I'm going to do instead, I'm going to do the oh no, okay, I'll do it like this. New price cal. I'll flip the chart. So essentially what we have here is, so we have the Swiss franc versus the US dollar and gold. Oh, I got confused here. Just gold versus the US dollar. I'll show you why. That's what I want to show you. Remove drawings. When the Swiss franc is able to break out versus the US dollar, that was always created tailwinds for gold versus for US dollar versus gold. And you'll see, look at this here together.
Yeah.
As this is breaking out, we're having this here. This is probably the final resistance line right here. It's angled, it's upwards. If ever that breaks upwards and the Swiss franc can continue its march onwards versus the US dollar, then you got some more evidence. And the CAD, right? We saw the CAD versus the US dollar. It's like, those are big macro capital flows that are carving out these charts, that are carving out where people.
All right, okay. I want to ask you about your narrative, Patrick, because I know you pay a lot of attention to ratio charts. And I was, while watching this rally in gold and then this huge melt up in stocks, I know that you're looking for that ratio to turn in favor of gold. So since they've both rallied, what has been the outcome on the ratio charts? Are they confirming the flow of money into golds more than stocks, or is it still kind of a push that we're getting both? Okay, is that your ratio?
Yeah, hold on. I'll check it out. I just did this for our members, but I'll show you guys. It's worth it. This is the Russell. I'll just start with the Russell because it ties in
Yeah.
between the small caps versus the large
Yeah.
cap stocks, how that's behaving, and that
Yeah.
how that ties in. So here's the daily chart for the Russell. Whoops, not that line. Here we had a breakdown. On the
Yeah,
daily
false.
chart, we had a
Yeah.
1, 2, 3 clear breakdown, but a false breakdown, right?
Yeah.
Because now we know, and now we have a breakout. So this is very powerful. Whenever you see a huge pattern, which is supposed to resolve downwards, I was probably bearish here, but it reversed. It went right through, and now we're breaking on the other upper side. That's the market telling you something. The bearish bias for the Russell right now, at least nominally, that's out the window right now. It's going on full cylinders. Here below is the breadth. So it's the percentage of stocks in the Russell above their 200-day moving average. And we used to have bearish divergence. But now look, the breadth, there's about 67% of the stocks above their 200-day moving average, higher highs with the price. It's confirming. And now we could just be in a here, see these overheat zone where the Russell just keeps adding more and more of its stocks above its.
People are talking 3,000-4,000 Russell in 24.
Oh, well, look, yeah, why not? Until the price starts hitting walls. Here, there's a wall at 2,100. Like before I look at bigger targets, but I'll show you why that ties in to gold and silver. So now I'm zooming back. Here's a monthly chart for the Russell. Here did a false breakdown also on the monthly chart. It hit the cloud. The cloud brought it back up, and now it looks like it wants to break out to the upside. But now, okay, this is critical. I'm going to minimize this. I'm going to minimize that for now. This is the performance of the Russell versus the SPX. This is the performance of the Russell, the bottom pane versus gold. I'm going to draw a trend line here. I'm not quite sure where my breakout's going to be, but here's a 3-year moving average. So whenever, often guys, a good trick is if ever it's messy, you haven't, you can't see really how to draw the trend line, you don't have 3 reactions, always look at the moving average, because the moving average will always be objective and unbiased. It's mathematical, right? If the price is above an inclining 3-year moving average, well, you don't need to draw anything. It's just reality, right? So right now, the Russell is trying to go back up towards the SPX. It did a breakdown here versus SPX, but it's trying to go back up. Look at the dates. The Russell, guys, the small caps, is like a recovery. And it ties in with silver, which I consider, and even gold to an extent, a recovery metal. Look at the date here. This was after a huge .com bubble bust. The Russell drastically went down, underperforming SPX. But on the recovery, while the US equities were going sideways, the big caps and going up, the Russell was outperforming.
Yeah,
so
out of the last period, it was 20 years ago.
Yes, it was outperforming. That's the last time they outperformed. So I'm looking at that, and look at this, what happened here at the same time that the Russell was outperforming SPX. The Russell was also underperforming gold. So this is what you want. This is the combo. This is the combo that you want for a precious metals bull era. You want the Russell recovering. So you don't want any rug pulls. You don't want any deflation. You don't want none of that. You want the Russell really jacked up on steroids, outperforming the SPX, but you don't want it too hot. You don't want it outperforming gold. So the Russell has been underperforming gold since 2018. Now it's going sideways. It's bear marking rally here. You don't want to see the Russell overheat too much. You want the continuation breakdown. You want that breakdown line here, that 3-year moving average. You want it to hold down. So I'm keeping a close eye on that. And I'll show you how that ties into silver. Where is here, distance from moving average. I'll pop that up. Here is the distance from moving average for the Russell. So the it's moving up nominally, and that's how far it could get stretched. Whenever it's too stretched, it overheats. So you could do some TA here. Often, I use this as a profit-taking zone. Even if forget the price, when you're going to take your profits, let's say these people have 3,400. If the price goes up so fast that you're so stretched from the moving average, that's when you take profits. No matter where the price is, if ever the price is above 30% above its 3-year moving average, you take profits because it's an area here where statistically it's going to get stretched. But I'm going to overlay here silver. New price scale. Okay, where's my silver chart? Where did I put it? It's okay, it's right here. I'll drag it here. I'm dragging the silver chart on top. I'll put it on log scale. We're just going to try to. So you'll see here, silver loves rallies of the Russell. You see here, here's the Russell exploding above its 3-year moving average, trying to distance itself. Look what happens to silver. It tracks it. It tracks those capital flows in the smaller cap stocks. It did it here. And here there's an exception where silver was rallying upwards, but because it did not have, the Russell was not expanding away from its 3-year moving average, there was a rug pull happening, the GFC crisis. And then after that, that rally in silver was unsustainable. But look at that. Look, silver loves the Russell going bonkers, right? Look, it tracks it.
Okay.
Tracked it here, they track it together. So if ever, and you got to see this as fuel, because look at the tops. I'll show you the tops in silver. Here. Look at these
Pretty
tops.
far away. Yeah.
Well, the tops happen when the Russell is stretched. I'll move this one here. You see when the Russell hits its distance from moving average, how stretched it is? Silver tops. Here, 2011, silver tops when the Russell overheats. 2021, silver's in topping here. The Russell stretch. So now the way I see this is possible if silver nominally is able to break out on its own chart merit, there's fuel for silver to go up alongside the Russell on the next rally up until the Russell tops, and then after that, that could bring some headwinds to silver. So, look,
these are good charts. What about I know you followed Dow gold ratio charts. Is there a message there over the last couple of months, like there is in Russell? Because Russell's really been exceptional compared, and I mean every indice has been exceptional.
Yes. So. Look, we know the Dow. I'll show this to people. I'll put in new pane. Okay, below is the Dow. The Dow is bottom left to top right, right, for forever. I'll remove this.
Yeah.
Here, look at the bottom, guys. This is the Dow.
Yeah.
But when the Dow goes sideways or even going up nominally, here you see I had a nice run here. It was above all-time highs back in
08.
That it was even a breakout. So 2006 to 2007, it overheated.
Yeah.
But look at its performance versus gold during that period. It was going down. You always have to see, even if you have a stock that's going up nominally, compare it at the very least to another asset class. Gold's great because gold tracks your purchasing power inversely. And then you'll see, is the Dow going up because it's the Dow, it's invincible, or is it because the units you're measuring it in, then they're losing purchasing power? It's an illusion, right? All these are ratio charts. Even the Dow, it's a ratio. It's a Dow, one share of Dow. How much USD units do you need, right, to buy it? So if you're underperforming gold, but you're going up nominally, that's not the best environment for growth stocks. You want to be like here. So you want to break out versus the gold. Then the rally has this rally here from 2012 all the way to today, or even until here, it has full steam ahead. But
you have any targets in mind for 24?
Targets for the Dow nominally?
No, for gold and silver.
Well, gold has a weekly defined breakout, a monthly defined breakout. I'll pop up gold. Let's switch gears to gold. Here is the monthly. We had a breakout last month, right? Even here, the wicks, you see its noise, see that crazy up and down. It just, look, it did the same thing here. Like there's a whole bunch of these doji, like indecision months. But when those happen above an inclining 1-year moving average, above a 3-year moving average, above the cloud, the bias has to be bullish, especially that now you have this clean breakout line, which is support. So that's on the monthly. On the quarterly, look at that. We could be getting, and that's an aggressive rising trend line. Those are. It's like popping a pimple there. It's like it's a pressure cooker. Either often they could go up and then bam, just trick everybody. But if ever it survives a pullback, eventually it could be a pullback. If ever it survives a pullback, then those are super bullish. They just people don't believe them. They're aggressive. The pressure is just building up and it pops it up. You had another one here. See here how aggressive that was on the quarterly chart. It's aggressive, right? It
Yeah.
pops it up. That's the quarterly. We might get this in a couple of days. Here, I'll put the semestral chart. Look at this thing. Look at that thing. You could even make a case that well, it's not a clear trend line, but it's moving up, man. It's moving
Yeah.
up. Maybe I could draw it like this here. 1, 2. I don't have three points, but it's definitely not breaking down. Right? You can maybe make a case. You had a flag here. It's breaking out, but look at that semestral chart above, 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 above. The
Yeah, so
yearly.
you
Look at the
can't even
yearly.
get cute and wait for pullbacks then.
Well, no, I wouldn't wait for pullback. Like this. Okay, this is I thought about this a lot. Here's a yearly chart. Look at that. Would have a yearly confirmed pull
Yeah.
flag continuation breakout. So if you want to know what the target is, just like in a like that's
Yeah.
that's the target there, 2,750, just on the yearly chart, right?
All right. Nice.
Pullbacks. This is my thought on pullbacks there. If you have a confirmed breakout, you have a confirmed breakout. I'll just go back on the monthly for gold. I'll just show you what happened. Remove drawings. Here was the confirmed breakout back in June of 2019. You buy the breakout. Yes, you're above the 3-year moving. You're above the breakout line. I'm going to wait, get closer. Don't get greedy, guys. This is it. It's the breakout. If it's truly to be the breakout that it's supposed to be, it's not going to come back down. But sometimes 80%, well, most of the time you do get a pullback. Then maybe you could add on it. You could wait, and even then, sometimes a pullback could just be a false breakout, and then it goes back down. So you still have to wait until the pullback completes its pattern and then moves up, and then you'll be buying close to where you were. So I would definitely buy the breakout as is. If you want to, if ever there's a pullback and you want to add more as the pullback's consolidation above the breakout line, which is now support, materializes.
Where's that price? Where's that line come in?
For gold?
Yeah.
Well, there's no right now at this stage.
Breakout line. Breakout line.
Oh, here the breakout
the
line
horizontal
is
line. Yeah.
it's at 2,000 there.
Okay.
The breakout line is 2,000. You can make a case that the pullback is done already because you see I have a wick, intra-month wick there where it came and tested it. That could have been your pullback, but you could have a longer term pullback. Sometimes could go up and then we could go down 3 months, retest it from above a little later, right? It could go up like this, but that's like 1 month, 2 months, 3 months, You
have a technical target in silver, similar to the way you computed gold's upward target.
So what was that? That was I'll put my silver quarterly chart. Okay, here I have drawings. Cool. Goodness, look at that. It's a war zone. Let me just clear that up.
That's why I call everyone a warrior.
So here's the quarterly chart for silver. I'll just remove the cloud. I'll put on the line chart.
Yeah, the space shuttle is on the chart.
Yes, always a space shuttle to make it even harder for traders to control their FOMO there. I'm not helping anybody when I'm doing that. Right? You should anyway, that doesn't help at all.
I like the spaceship.
Anyway. I like it also. It makes it fun a little bit. It's like I know the trolls, you put spaceship, but let me have fun a little bit with this. So here's the quarterly 1, 2, 3. Look, it could be we have a quarterly defined breakout with this angle. It's not the final breakout line, right? It's not a horizontal breakout line. There's a huge wall at 28. We all know this. But that momentum, as defined by that descending trend line, we could potentially have a breakout. So the immediate target would probably be around the $27, $28. That would probably be it. Especially if gold breaks out, then that is more clues that silver is probably going to run past this wall here, and the target would actually be a little higher up there, $35.
Okay. Great presentation, buddy.
It's all I look at this stuff all the time, and we keep revisiting the charts, and we keep learning. Every time I think I know something, then I see, oh my goodness, and things change. Well, you've seen this, right? Like relationships that were working back in the 70s, They changed during the 2000s, and now in the 2020s and going to 2020 and 2030s, it's slightly different, right? The TA always works, but the danger we fall into is that bias, like always trying to apply what previously happened to today. It's never quite the same, right? You got to respect the market, the price action, and just get some good risk versus reward setups, play them. If they fail, well, you have your risk money management and just move on to the next trade.
Great advice, Patrick. Best way for people to follow you and Kevin?
Bad Charts One on Twitter. We have a website, northstarbadcharts.com, guys. And that's where we have all this stuff there for our members. But Bad Charts One on Twitter, that's where it starts.
Okay. You have a YouTube channel too?
Yes, true. North Star Bad Charts, a YouTube channel. We host people. Recently, we had Michael Oliver on. It's always like, and we could have you back on soon, Dale, there if you want to.
Yeah, let me know.
Yeah,
I'm open to entertaining you.
I love it. I love being entertained.
All right. Well, Patrick, I really, we've been talking, it's got to be at least 2-3 years now. And, this is the setup and what you've been looking forward to for a long time. Now it's manifesting. And I want to thank you for your contributions to our community over the last few years that we've gotten together.
Thanks.
And, wish you and Kevin much success and everything turn green and gold for you guys in 2024.
Beautiful. Thank you, Dale.
Okay. All right. My trading warrior brother, you got to follow Patrick Kareem and do it at Bad Charts One and go to their website. And these guys live and breathe precious metals. So it's their year. Thanks, buddy.
All right, man.
Appreciate it. All right. I'll be in touch with you. We'll talk again in the spring. And that's a wrap, everyone. Good luck the rest of the day. Hope you enjoyed Patrick. I know I learned a few things today. And you're either growing or dying. So we're all still learning. Remember, don't just count your pips, count your blessings. See you guys tomorrow. Good hunting and adios. Thanks again, Pat.